All right, everybody, you're back for day number 2 of the Money School preview, the kickoff event before we get into our 3-day training this weekend. And today we're going to get tactical. We're going to get in the weeds. We're going to talk about what it is the wealthy do with money that you don't. What do the 5% or the 4% or maybe even the 1% do that you're not doing with your money? And then not only what are they doing, why? Stephen, cue it up, show some slides as to why the wealthy do things different. Why is it that Michael Blurry is talking about things that you're not talking about or seeing? Why is it that the news is showing one thing and what you're going to hear about today or hear about on these posts is a whole nother thing? Well, that's the important mystery that we really need to get out there. Why is it that the wealthiest Americans, the wealthiest people out there are selling when everybody else is buying? I was just on a call today on my show, the Chris Naugle show, which you all will be seeing soon. It's a celebrity show. So the only way to get on the Chris Naugle show is you got yourself a blue check mark or you are a known celebrity. So today I had an American hedge fund manager. I can't give you the name. You're going to see it. And we were just talking about money, psychology, mindset, and why it is the wealthy do things different than you do. So we're going to get into that. But you know what? We just keep hearing this over and over that the wealthy are doing something different. Stephen, what happened in the markets today? Can you just give us a quick market update? Because we talked yesterday about the storm, the storm that's on the horizon, but maybe the storm's here, maybe not. It's anyone's game. Show that slide as to what we saw happen today in the markets.
Yeah, it's pretty wild. I don't know if I had the one from today that you had up earlier when we were starting up, if you want to do that again, but the Dow fell 569 points today, which, we're at 30 some, the market's so high that it's like, 569 points is not even a huge deal anymore. But when you see the trends and what's going on right now, and you start putting all the pieces together from all over the place, you start listening to people like Michael Burry, who was the guy from The Big Short, if you guys saw the movie or read the books, and he's the one who predicted the, 08 housing crisis and everything that happened. And you're seeing more and more people coming around to it. Just, there's no way to sustain what's going on right now. I mean, we're in huge bubbles where the economy's just nuts with the world economy's nuts with COVID and everything. The Fed, God knows what they're doing. We see every day a new report comes out that the Fed is buying all these stocks, and they're all the insider trading that's always gone on forever. But it seems like more and more of that stuff comes out all the time. The wealthy. One thing that I've learned about the wealthy is they're not smarter than you or I. They just understand the world a little bit better. They understand money, right? And if you can understand money, these pieces of the puzzle start to fall into place. So, what we teach you here tonight, what we're going to teach you during the 3-day weekend coming up starting Friday, it's any one of you can follow these strategies. Any one of you can learn this stuff and start applying it in your life right now. Even if you're starting with zero, you got to start somewhere. You got to crawl before you walk. You got to walk before you run. Then once you're up and running, you can go out there and do marathons and Ironmans, right? But you got to start somewhere. So you have to start understanding money, understanding what the wealthy do, understanding banks, right? I mean, it's not rocket science. It's just learning what has been proven to work and doing the same thing. And that's what we teach you guys. This stuff's not taught in college. It's not taught in high school. It's not taught in traditional education. It's why they call it alternative investing. Why it's alternative? It's because you were never told to do it before. Why do you invest in a 401k? Because you were told to do it. I ask people that all the time. Like, they ask me like, where should I get money to put into my money multiplier policy? Or, how is money for 401k? Like, why is it there? And so I ask them like, why are you putting money there? And they're like, well, I was told to, right? I mean, so you're told to do something, you have no idea why or what's going on with it. I mean, do you understand how a mutual fund even works? Yeah, it's a bunch of companies all supposed to diversify, but do you know the fees involved? You know the cost involved? Like, there's so much more to it than just, it's a mutual fund with lots of different companies out there, right? And that's what these 401ks and what these big pension plans and these big, huge hedge funds are purchasing right now. If you saw what they were actually buying with your retirement money, you'd probably cash the thing out and forget about it, right? So it's just pretty wild. So there's just a couple, I was looking at Michael Burry earlier, and he just had a couple little things that he popped up here. Does that work?
Yeah, it's small, but we can see it.
All right, my whole screen just disappeared. I'm not sure what happened there. Sorry about that, guys. Yeah. So this is, it just says this is 94% correlation between the NASDAQ 100 in the 15 years leading up to today, compared to the 15 years leading up to the 2000, to the year 2000, which of course was the .com bust that everybody went through. And that's what the NASDAQ is built off of. The S&P 500 shows 95% correlation. So we start seeing these correlations. You look what's going on with the stock market. If we look over the month, if we look over the last month, where the Dow is. The Dow is the largest metric of, the largest companies in the United States. That gives us a good idea of how the economy works, right? So the Dow over the last month is way down. We've had a back up, then another big drop, and we had a little try again, and now we're just back down again right now. So does that continue? Do we get one more rise before? Who knows? That's anybody's guess, right? But here's what you have to ask yourself. Is that a risk I'm willing to take? Is it worth getting an extra 1%, 2%, 3% of gains against the potential 10, 20, some people saying 50, 60% market crash? Because when that thing starts falling, you're going to be scrambling like everybody else trying to sell and get out of it. But what is the right time to buy when everybody else is selling, right? When is the right time to sell when everybody else is buying? And if you follow these simple rules and follow what people like Warren Buffett do, buy low, sell high, and don't lose money. It sounds so easy. So what is Warren Buffett doing right now? He's selling, right? He's in lots of cash positions, things like that. So we're just going to remember what they're doing. Let me just show you a couple more that I saw pull up that I just thought were very, very interesting. There
you go.
Let me see here.
How many of you bought into the meme stocks, the GameStop or AMC? How many of you have bought into that whole, Reddit write-up is what I call it. Have any of you bought that? Any of you made a lot of money on GameStop or AMC? Nobody, if they lost money, is going to tell us. But I just want to know, has anyone made a lot of money? You guys can chat it in. I want to get you used to a little bit of housekeeping. We love to chat with you. We can't, I'm a speaker from stage. So when I'm on a stage, I'm down in the crowd. I'm calling people out. Like I try to do that here too, because this is how you're going to learn. You're not going to learn just by listening to us. You're going to learn by communicating with us and actually asking, what should I be doing? Here's my situation. You can do that through the Q&A, or you can do that through the chats, but that's how people learn, folks. So we need you commenting. We need you making, some comments on the different things we're talking about, because we really need to know what you're all doing. So you can either, be, in now or in the know as to whether that's smart or not, or, listen, we'll give it to you how it is. You might not like our answers. I'm not here to try to make friends. I'm here to try to teach you something and get you ready for what's coming so that you will see what is the biggest opportunity of your lifetime, which is right on the horizon. Because if everybody thinks the opportunity is today, you're missing the whole point. The opportunity is what's next, not today. You're fighting for scraps right now. It's like a whole bunch of mice running around, just grabbing little scraps. That's what you're doing. You're not fighting for the real opportunity. You're just playing into the trap. And that's exactly what you're doing. So let's see. AMC got me together. Let's see. And I don't know what that means. So Jamal, tell me a little bit about what you mean by got me together. Bought Tesla when it split. That was smart. Okay. Tech stocks on the other side. My 401k, let's just see. No GameStop for me. Yep. No get rich quick schemes. I do have my BYOB finally. Awesome. So
how many of you are using Robinhood? I'm just curious. Just type in Robin or something if you're using Robinhood.
And there's nothing wrong with Robinhood. It's kind of like the new platform.
The reason I bring up Robinhood, Chris, is how easy is it to trade on Robinhood? You literally pick up your phone, you hit a couple buttons, and you can do options trading. You can do margin trading. You can buy spreads. You can do naked puts. You can do all these crazy high risk investments right there at your fingertips. This was never done before. And the reason I had this picture up a second ago is it goes right back to like what Kennedy said. And it was Robert Kennedy. Who was Chris? Was it Kennedy?
Yeah,
is
Kennedy
that right?
Senior. Yep.
And he said, he was sitting there getting his shoes shined one day, and the shoe shine guy started telling him about the stocks that he's buying and what he's going. And Kennedy goes, you know what? If the shoe shine guy is telling me about what stocks I should be buying, it might be time to start thinking about getting out of the market. Like I said before, when everyone else get in, it might be time. And this is from 1929, the New York Times, Leroy Peavy. It has been evident for the last 6 months that this country has been an orgy of margin speculation. It was indulged in by all: elevator boys, typewriter girls, taxi drivers, and even school children. So think about the relation to that. And did something happen in this country in 1929? Right?
I don't know, man. What happened in 1929? Because, in 1929, if you look at the tabloids, you look at all the news, in 1929, everything was going to the moon. Just like everybody's saying today, just like all the people buying AMC, it's going to the moon. Anyone been to an AMC lately? Like, what happened to the intelligent investor from Graham's, like what happened to the rules of investing? They're out the window, man. They're gone. They're gone. Fundamentals, what is that? New investors, Robinhood investors, most of them don't even know what the word fundamentals mean. Now, I'm not saying you can't make money not buying with fundamentals, but you have to understand that if you're buying and selling right now, you got to have some serious rules. Jamal just said, he bought AMC at a great price. I don't know what it was, $3.50, but where's your exit? We all know how to make money. Jamal's making a bunch of money. He's way up. If he's got, if he bought it at $3.50, but it's not making money that's important. We all know how to make money. All of you are making money in the markets. You know this. You look at your 401k, look at it. You're making money. Now, let me challenge all of you. I'm going to give you the biggest challenge of the night. Keep it. There it is. Keep it. Prove to me you can actually keep those gains. Prove it. Prove it. How are you going to keep those gains? Because it's not making money that matters, folks. It's keeping it. That's the tricky part. That's the hard part that nobody seems to freaking get. It's not about how much money you make. It's about how much you keep. That's what the wealthy know. They don't give the money back. They know how to make it. Then they know how to make it go to work for them, and they don't give it back. Sure, some of them do because they get risky. They get greedy. That's the only reason they give it back. When others are greedy, be fearful. When others are fearful, be greedy. Those are some like wise words from Warren Buffett that everybody should follow, just like they should follow buy low, sell high, and don't lose money. But what does everybody do? They buy high because it feels good. Because FOMO, we talked about this in the show today with the hedge fund manager. Everybody right now has this FOMO, this fear of missing out. Oh my God, if I don't buy this, I'm going to miss out. Everybody's buying it. I'm missing out.
I mean, look at this, Chris, exactly what you're saying. TikTok users watching Nancy Pelosi for stock trade tips. So they're going into her disclosures that she files in the Congress, seeing what she's buying and following what she's doing, even though there's all kinds of, so people are just following the herd. Like it's this herd mentality that's going on. And it's so easy to happen these days when you have things like Robin, you have things like TikTok, you have things like Twitter, it's just instant information. So if everybody's going in one direction, and we know statistically speaking that 95% of people are not going to be able to retire the way in lifestyle that they want to. Why are we doing what everybody else is doing? Why are we following that herd mentality, right, Chris? I mean, so this is why the stuff that we teach, you're not going to learn this. Well, some of you might have learned it on TikTok because we're starting to take over TikTok and learn what works. But this kind of herd mentality, Chris, just doesn't work, right?
Absolutely. It's, it's the age old thing, follow the leader. And sometimes the leader goes off the cliff, then everybody follows it off the cliff. It's a very interesting dynamic that we're in right now. We are not in unprecedented times like so many people think. We are in the same times we've been in many other times. It just looks a little different. Technology is a little different. Things happen a little faster. Okay. It's just different times doing the same old shit that we've always done. And that is the God's honest truth. I don't care what investor, whether it's Blurry, Ray Dalio, Warren Buffett, Bill Gates, Mark Zuckerberg, look at them all. What are they doing? Selling. They're selling. They're not buying. Everybody else is buying. If you're going to buy right now, have a plan, have a set of rules. I'm going to buy right now. You're buying into a speculative market, but every single market that there ever will be, whether the market's high, low, sideways, there's opportunities in every market. But do you know how to find those opportunities? Or do you just know how to jump on the bandwagon and follow everybody else? Now, listen, I'm not yelling at all of you. I'm trying to wake you up. Literally, this is like the Matrix. You've all seen the movie The Matrix. Red pill or blue pill, you pick. Which one do you want? You want to live in that little comfy computer program where everything's controlled, but you think you're in control? You're not. Or do you want to actually know the truth and know how to actually really play the game, which sometimes sucks. Sometimes the truth freaking hurts. And in this case, I promise you it hurts. The truth is not what you see on the media. The truth is not what you're making out as this market that's always going to keep going up. The reality is the market is going to crash and burn. I just can't tell you when, and nobody can tell you when, because timing the market is impossible. The best in the world can't do it. Ray Dalio, undoubtedly one of the top investors of all time. He founded Bridgewater Capital. You should read his book. Listen, tonight here, we're going to do something really cool. You guys see this stack of books here? I'm giving them all away. So we're going to basically start probably right now. We're going to start giving books away, and it's not going to be hard to get them. And I'm going to ship them right to your door. Personally, I'm going to ship every one of these books to your door. And there's all sorts of good ones, but all you're going to have to do is participate. You guys like participating? Good. You're going to be rewarded for participating, and we're going to be watching that. Everybody loves free shit. Me too. Why wouldn't you want free stuff? But there is no free lunch. You do all understand that, right? There's no free lunch. If someone gives you something, and I'm not saying the books, but I mean, like out there, the government right now, they want to give away a lot of free money. Is there a free lunch? No. Oh, but I make under 400,000. I'm not going to be taxed. You never heard of inflation then? Because inflation is a hidden tax that is already hitting you. Inflation, there was a news article, if you follow the news, which hopefully none of you even like watch the news anymore, because it's just a bunch of I don't care what station you watch, it's all bullshit. Like, you got to find information from a different source. So right now, the government is trying to push through another stimulus program. Who knows what it's for? It doesn't really matter. It's more trillions in front of it. Nobody even really understands what trillions mean anymore. But back not long ago, $1 billion was a lot of money. Now it's $1 trillion. Do the research. Google the difference between 1 billion and 1 trillion, and you will understand the difference. It's ginormous difference. But when they give you something for free, and then they tell you they're not going to tax you if you make under 400,000, we're only going to tax the rich. So that's a cliche. Okay, we're only going to tax the wealthy. That's the biggest lie in the world. You want to know why? The wealthy know the tax code. They have tax accountants. They have professionals that know the tax code. They don't file the same taxes you do. You can't tax the wealthy. You can't tax Warren Buffett. You can't tax Bill Gates or the Clintons or any of them. Do you know why? Because they know the game. And the game isn't 1040 tax reporting like you and me file. The game is 1041 tax reporting through their trusts and foundations. Get with the program, folks. They don't pay taxes. They never will. And it doesn't matter how much they say tax the rich. You're not taxing the rich. You know who you're taxing? The middle class. Because as they try to tax the business owners, and not the uber wealthy that understand 1041, but just the middle class business owner that makes $450 to $1 million a year. There's lots of them, but not enough. But they are the ones employing a lot of people that you know. You tax them. What does that mean? That means your cost of goods goes up. Anyone been to the grocery store lately? Is a gallon of milk the same cost it was last year? How about those bananas, everything, cereal, everything costs more. And everybody says, oh, well, that's just supply and demand. No, folks, that's just the reality of what's going on in the world. Inflation is a hidden tax that is stealing. I did a TikTok video today showing you that from 1913, $100 and the value of it today. Does anyone know what $100, the value of $100 in 1913, what is it worth today? Can anyone guess? $36. That totally off. That was mid. $3.87. $100 of value in 1913, when the tax code was written and the Federal Reserve was created, is now worth $3.87. Think about that. How much value was eroded through inflation? A lot. Gas prices are going up. Everything's going up. It is not a tax that you pay. It's not the tax you get at the end of the year like they want to make you think. It is a tax. It's a hidden tax. And it's going to eat you alive if you're not able to beat it. You can't beat inflation. You can just earn more than inflation. It's getting tough. Inflation right now stated is under the estimate. They were predicting 4.2. It's at 4. Woo! We're going down. No, you're not. They're just not including the things that actually matter. They're not including housing, okay? Roofs. They're not including all the housing costs. Anyone looked at what rentals are? They're up 10%. Anyone look at the price of real estate? That's way up too. They're not including fuel or oil or gas. That's up a lot. And probably a lot of the reports aren't even including food. Wouldn't you think those three things I just mentioned should be included? But if they did, it'd be like 7-8%. They don't want to report that. That would be pretty damn tough. Now, how many of you actually knew all that? Because that's pretty basic stuff. Say aye if you already knew that stuff. Okay. Now what I want someone to tell me is, someone please tell me this one answer. And this is for the book. The first person that gets this book. Successful Real Estate Investing, How to Avoid 75 of the Most Costly Mistakes Every Investor Makes, okay? Got all sorts of weird books, but this book right here, I want you to tell me who the wealthiest family in the world is. Who is it? Who's the wealthiest family in the world? Okay. Someone said the Rockefellers, oh, whoa, hold on. Somebody got it. Drew just got it. The Rothschild family. So Drew, what I want you to do, and Stephen, if you could just take some notes while I'm talking, and I'll do it while you're talking. Can you just write down Drew's address? Drew, send us your address and I will put this with your name on it. So here's how we're going to do this.
You're going to have, maybe can they email me their address so we can keep it all in one place?
Yeah, just send Drew a message. So right there, I'm going to put your name on it and I'm going to throw it on the floor. That's Drew's book. So see how that works? Super easy. And then all you're going to do is you're going to email Stephen or me your address and tell me what book you won. So Drew, Successful Real Estate Investing. That's your book you won. That's how we're going to play this game all night. All right. So a lot of you were getting that. The Kardashians, Kevin, really? The Kardashians, they don't even blip the radar, buddy. They're not even close. But I love it, man. I love the participation. All right, so there we
Chris,
go.
You know how you know that this is all theater and they're not actually wanting to tax the wealthy? Because if they wanted to tax the wealthy truly, they could do so. All they have to do is take that $100,000 document, that's the IRS code, rip it up and have a one-page thing that says this is what you're going to pay in taxes. Why don't they do that? Because they're all part of that wealthy category that takes advantage of all this stuff. I'm not going to get a specific stuff came out this week, but that's the fact. And that's how you know that it's BS. So the other thing that I was going to say on inflation real fast, even if we had a nice target inflation of 2%, right? In 20 years from today, at a target of 2% inflation, that means your wealth is devalued by 40% over 20 years. That's not good, is it? So if your money's sitting in a bank, what's a bank paying? 0.01. So even at a target inflation rate, you're still losing a ton of money. So it's just all insane. So this is why this is so important, more than ever since maybe the 20s, that we're teaching what we're teaching right now. And I hope everybody really internalizes this stuff.
All right. So, there's a lot of talking heads out there that do videos and trainings and they tell you all the problems and you're like, yeah, I know, but like, what do I do? How many of you ever think that, right? You got all these people saying, oh, here's the problems, inflation and the market's fixed and the wealthy know how to beat the tax code. Or no, they don't. They just play in the tax code and all these things, but nobody's ever telling me what to do. Say if you think that is a commonplace, because we're going to fucking break that tonight. Excuse my language, but hey, I got no filters. It's my show. You don't like the swearing? Take off. You don't need to be here if you don't want to hear swearing, because look, I'm going to give it to you for real. Tonight, I'm not going to just tell you the problems. We got the problems out of the way. There's lots more, but who cares what the problems are? Let's get to the bottom of the solution. How do you beat inflation? How do you beat Uncle Sam and not have to pay taxes on all the money that you're making, at least some of it? How do you do what the wealthy do? Let's get down to it, because I'm sick of talking about problems without giving you guys solutions. So here we go. All right, first thing, this is what I'm going to show you in a second. I've got slides that I'm going to put up there, and I'm going to show you one of the biggest secrets of the wealthy. What do the wealthy do? You hear me talk about this all the time. They become their own bank. They don't store their capital where you do. They change one thing, and that one thing is where their money goes first. And then what do they do from there? Well, from there, they start to move their money. Their money is always in motion. Think of a bank. I just want you to think of a bank, and I'm going to show you this in a second, but a bank doesn't just sit on money, because then their money would deplete through inflation and lots of other things. Banks constantly move money, and every time they move it, they make a spread in between that money. You can do the exact same thing with your money. Just yesterday, I showed you a way to move your money in a circle, but that circle, if your money leaves your bank, it comes back to your bank. Doesn't that sound cool? If all your money originated in a different place than somebody else's bank over here, which we're going to talk to you about, if it started there and it moved out to do things like buy exercise equipment, buy cars, pay off credit cards, pay off cell phones, and buy tablets and all these things that you do, if that was the case, today, what happens after that? Well, you buy those things, and what happens after that? Your money goes to the credit card company. Your money goes to the bank financing your car. Your money goes to Apple or Samsung, because those are pretty much the only two phones that anyone buys. Your money goes to Sears or whoever sold you the exercise equipment. Does your money make it back into your bank? No, it goes to somebody else's bank, and we don't even think that that's a problem. Folks, that's a problem, because the wealthy don't do that. You've heard this a million times. I don't even need to tell you. The wealthiest 1% get all the money back. So you've heard it, somebody wins the lottery. Where's the money all go back to? The wealthiest 1%. Why? Folks, they understand a circle. Novel idea. They understand a circle. Our money starts here. It goes over here. And then it comes all back because they're the bank. You should all have just had a light bulb going off going, holy shit, I never thought about that. My God, it's so simple. It's just a damn circle, man. That's all it is my money starts here, it goes over here, and then it comes back over here. But I don't know how to do that. You will tonight. But here's the other thing. Let's get away from the circle. Let's just say, oh, I don't like that thing that Chris is going to talk about, those specially designed and engineered whole lives. Dave Ramsey says they suck, and Susie Orman says the same thing. I've heard of that, so that's a scam. Great. So we'll debunk that, believe me. But let's just say you just don't want to do that. Maybe you're uninsurable and you have no one else to use as a body to insure to do what we're going to teach tonight. So what are some other options and how you can move your money? Yesterday, we talked about the equity in your house, tapping into it through home equity lines of credit or home equity agreements. And then you basically use the equity that's sitting lazy in your house. And now you have a source of money. And that source might cost you 3 to 5%. But over here, you've got credit cards, you got cars, you got all the things that you're doing. You got crypto. I'm just going to put crypto because everybody likes to talk CRYPTO. Everybody wants to talk about these. Your credit cards are probably costing you 10 to 29%. Your cars, I don't know, some of you getting those 0%, but some of you are at 8%. Okay. If you can borrow at 3 and pay off a credit card at 29 and take the money and put it back into your HELOC, you just did the same thing. You kind of did a circle, but you lost some money in between. And not only that, you are not in control of the HELOC, the bank is. So you're missing a couple of points, but you see what I'm saying is it can work with other vehicles. But let's also talk about some really, really cool things. Inflation. That's what we're going to talk about. Okay. The 800-pound gorilla in the news. Inflation. What is the real number? Is it 4% or is it actually closer to 9%? Well, we'll never know. So it's not even worth talking about. How do we beat that? Well, let's just assume it's 4%. You have to make more than 4% on your money. Your money literally needs to make more than 4% in order to beat inflation. So let me ask any of you, how do you beat inflation? What is a source where you can make more than 4%? Go. Give me some chats. How do you beat 4%? Where do you put it? Okay. Yeah, it's close to 9. I agree with that. Okay. High cash value through whole life insurance, real estate rentals. Okay. Love it. Love it. Where else? Where else? Come on. There's got to be other places. Some people just don't like the risk of real estate because we're at the high point. Crypto. Okay. Notes. I love that. More real estate. Come on. Give me some more creative things. You guys are elementary. Give me some good stuff. Just about any asset. Well, okay. IULs. Holy crap. We got a lot to teach there. Possibly though. Options, private lending, great source, funnels, insurance, private lending. Come on. Where else can you beat it? Options. What are some big inflation hedges? You've heard about this. Jim Rickards talks about it in all of his books, but nobody said gold. How come? Oh, gold is boring. But isn't it an inflation hedge? It is. Always has been. Okay. Some people said crypto. Now, I will say crypto is probably not a good inflation hedge because crypto carries too much risk, but everybody has different risk tolerances. One of the big things that I talked about with a hedge fund manager is evolving beyond the investing sentiment that most people have and talking about risk investing. Any of you that are investing, you should never have more than 1/3 of your net worth in any one position, no matter how good you think that investment is. Now, any one position is crypto. Any one position is gold. Any one position is also real estate. Now, real estate is a unique one because there's lots of different elements to real estate. What can you do with real estate? You can flip it. You can wholesale it. Okay. You can rent it. You can Airbnb it. There's a lot of different ways. And I would agree that real estate is probably a great way to hedge against inflation because this keeps your money moving and it constantly keeps your money working for you. But there's a lot of risk there. And a lot of people that want to get into real estate can't because they haven't figured out how to be resourceful because they think it's about the resources. So preferred stock, we got a whole bunch of stuff, but okay, come on, there we go. Drew just said gold, commodities, stocks dealing, with said commodities. Okay, Tyler, whoever Tyler is, just said US Treasury bonds. I'm surprised nobody else said that. And the reason they didn't is they're probably thinking US Treasury bonds, those are boring. Yeah, but you know what? US Treasury bonds are probably one of the best places to store your capital outside of private banking systems because of the inverse relationship to interest rates. If inflation gets rampant and starts going out of control, what's the first thing the US government will do? Okay. They've talked about it already, but they haven't done it. What is the first thing they will do? Inflation goes out of control. Go back to the 80s. What happened in the 80s? What's the Fed do? Come on. They raise something. What do they raise? Get with it. Juan, the exact opposite. They raise interest rates. You don't curb inflation with lowering interest rates. We're already at historically low interest rates. That's why inflation is starting to get out of control. So if inflation goes out of control, the Fed takes interest rates and they raise them. You haven't seen this because of the whiny baby that never stops crying. And does anyone know what the whiny baby is? Wall Street. They raise interest rates and the baby starts crying. They're like, here, give it a pacifier. Nope, that didn't work. Give it some milk. Nope, that doesn't work. Isn't the mom around here? Like, can't we do milkies? Like, give it milkies. Nope, that didn't work. The baby will continue to cry until the baby gets what it wants. And what's the baby want? Low interest rates. So the Fed has kept interest rates low. The same thing happened in Japan. How'd that work out for them? Don't answer. Not good. Okay. So interest rates will go up as inflation goes up. How many of you think inflation is going to go up? Okay. Tell me yes. Do you guys think inflation is going to go up? And if you don't think inflation is going to go up, put a no in there. Okay. Most people will say yes. They're printing another, what is this new infrastructure thing that's not for infrastructure? What is that? 5 trillion, Stephen? 3 trillion? I lose track.
There's one that's like 1.2, one that's 3.5. They're trying to put them together. And there's
trillion, 3 trillion. I mean, it's all just $3.7 trillion. Someone just said right there.
But it's going to cost zero. It's going to cost zero though, Chris.
Yeah. Yeah, exactly. It's going to cost all of us nothing. We're not going to have to ever pay for this. No, that's right. Because our future generations will pay dearly because we just gave up this country. We just destroyed the country. Anyway, so inflation can be curbed with gold. Okay, that's pretty conservative, but gold's pretty high right now. Would anyone agree? Gold's high. I wouldn't buy gold right now. You can do crypto. How many of you today or yesterday bought crypto? Say yes. I want to know how many of you bought crypto. Did you all see where crypto went? See, I'm getting pretty damn good at this crypto game, but I'm boring with crypto because I don't trust crypto. Crypto is 100%, I don't care what you think, 100% correlated to the stock market. So what does that mean? Correlation. If the stock market tanks, where does crypto go? Right down with it. That's what correlation means. So Bitcoin today is down 3.37% and at $41,000. How many of you think that's a good place to buy crypto given the measure of where crypto's been? Okay, let's see. Never have, no. And I love the people that are not buying crypto because you're probably smarter than everybody else. So, okay, a bunch of people bought today. A couple of people saying some other things. All right. So here's the deal. I want everybody to look at crypto, Bitcoin specifically, and I want you to look at 40,000 and 50,000. I want you to go back 6 months. You will see that at over 6 months, Bitcoin has literally trended within this range between 40 and 50. It's broken through 50 and it's broken under 40 for a very short period of time, like a day, maybe two. So if you knew that Bitcoin was going to trend within that $40,000 and $50,000 range, wouldn't that be a great play? When it gets down around 40, I buy. And when it gets to 50, I sell. How many of you can play that game? I don't care who you are. And the person, that said, I'm broke, I don't have any money, I guarantee you could find $100. The beauty about crypto is you can put, or Bitcoin specifically, you can buy fractional shares. I put $200 into Bitcoin every week, and I put $200 into Ethereum. Most people can do that a month. You can put $50 away. Like, it's not a bad play, but if you knew that it trended between 40 and 50, wouldn't that make a ton of sense to make a little bit of extra pocket change to buy a peanut butter sandwich or maybe take a friend out to lunch to buy it at 40? And when it hits 50, what do? You sell. Maybe you get lucky and you sell at 51. How many of you could do that? Seriously, I want to know. Could you do that? Because you don't have to be smart to invest money. You just think you have to be smart. You all think that you need some fancy financial advisor to tell you how to invest your money. It's because you're brainwashed. Because you've been brainwashed your whole life to believe that you need somebody else to manage your money. The cavalry isn't coming for you. You are the best source to manage your money. You just got to learn a couple things. And what you have to learn, first, you have to unlearn everything you know about it. If you know Bitcoin trends between 40 and 50, just buy it at 40 or close and sell it close to 50. And you make money every time. But remember what Warren Buffett said, buy low, sell high. That's what we're doing. And we're not losing money ever because we're selling. Most people would buy it at 40. It gets to 50 and it runs up to 51. They're like, oh my God, I can't sell it. It's going to keep going to the moon. Like everybody out there, it's going to go to the moon. And then what's it do the next day? Goes down to 45 and you're, damn, I should have sold. Yeah, of course you could. You got to set rules and you got to follow your rules and you'll make money. If you don't follow your rules, you will lose money. Might not lose today, might not lose next month, but you eventually are going to give it all back. And who's going to be there waiting to take it? Warren Buffett, Ray Dalio, Michael Burry, me, Steven. Okay, the little guys, because we are just little guys in comparison. But we're going to take that money that you lost because that's how the markets work. One person's selling and another person's buying, or one person's buying and another's selling, depending on how you look at it. Play the game, folks. It's not hard. So crypto, we got that one out of the way. I beat that up. Gold, maybe wait for it to come down a little more, but it is a good inflation hedge. Real estate, great inflation hedge. But right now, I want you to all understand something. If you're buying real estate today, just understand this. I don't care if you believe this. You are buying at one of the highest points ever. So I hope if you're buying real estate, you are prepared for the value of your real estate to go down up to, brace yourself, 40%. I said it. Damn it. Chris, that ain't going to happen, man. There's too many people that want to buy houses. Yeah, but when people are broke and they can't afford houses, are they buying houses? Hell no. You know what they're doing? They're renting. So as long as you're in the rental game and you're not buying A-class $2,000 to $5,000 a month rentals, you're probably in a great place. Because what happened in 2008 for C and D and maybe even B class apartments? They went up. Didn't the price of the rent go up in 2008 when everything else was going down? Maybe in the beginning, they kind of had to adjust it to help people, but eventually it went up. How about this? COVID. Last year, COVID, it was right there. What happened when COVID hit? Rents kind of stabilized, maybe came down a little bit just to help their tenants. But where is rent? Where are rents now? There are cities where rents are up 30%. Most across the country are up 10%. That's a lot, folks. So rentals in real estate are a great game. Just understand the game. And the game means if you need liquidity of your money, if you're buying real estate with the intent to sell in the next few years, you already lost. Forget it. Game over. The price is going to come down. So you got to play the rental game. You got to play the income game, maybe sub twos or rentals. Just want to get that out there. So rentals, great. U.S. Treasuries. Boring. Ask your financial advisor what they think of 20 and 30-year U.S. Treasuries. But wait. Ask them, but go with a fixed answer. I'll tell you exactly what they're going to say. Why would we ever buy U.S. Treasury bonds when U.S. Treasury bonds only pay 1.8 to 2.2% and inflation is 4%? Whoever told you that is an idiot, and you should really stop listening to them. So now you have a decision to make. You have a very important decision to make, and that decision is, who's the idiot? Okay? Am I or are they? Because I will tell you, when I was a stockbroker, just like your advisor's a stockbroker, we both had to pass a Series 7 exam. Steven, do you remember that giant Series 7 booklet? One of the hardest tests you can take. Harder
It haunts me to this day.
It haunts me too. It's awful. Remember when you were studying for that? What was 60% of that exam about?
Regulations and code.
That was the state exam, but the Series 7, a large portion, maybe 40 or 50, I thought it was like 60% was bonds, and then options, and then a little bit about securities, right? Bonds, boring. But advisors seem to forget about bonds because they're just not sexy. But you know what? I like unsexy things because, you know, sometimes the sexy things are the worst things. It's like the devil saying, come on, I'm sexy. Follow me. You know, it's all over the Bible. Follow me. You know, I'm sexy. But then the boring thing over there is really where the opportunity lies. So let me explain Treasury bonds. It's very simple. Here's an X. Everybody know what an X is? Well, let's draw a line right in the middle. These are, I'm just going to call this U.S. Treasury bonds, but I want everybody to understand this is every bond except for high yield or garbage junk bonds, okay? Everybody know what garbage junk bonds are? They call them all different names, but anyone hear that in China, the largest real estate developer, I think there might be one of the largest in the world. Does everybody understand that they are defaulting on, what is it, tens of billions of dollars or maybe more of debt? You guys have all seen this in the news. That ripple effect, those bonds, because that's what they are, the debt that they're defaulting on are bonds, but they are junk bonds, okay? Junk bonds from the largest developer that everybody bought into, that is going to have a ripple effect all the way through the market. You just haven't seen it yet. Same thing that happened in 2008. Do you remember what bonds those were? GMOs, CMOs, all that good stuff. Remember all those debt securities, okay? Bottomed out. That's why 2008 happened. It almost crashed the entire financial system, and it's happening all over again. Maybe a little different, but the same way. So U.S. Treasury bonds, I know I'm boring you. If you ask your advisor, they're going to say it makes 1.8 to 2.3%. Why would we ever do that when inflation is 4+%? That seems idiotic. Why wouldn't we put money in riskier assets like stocks where we can make 10, 20%? Okay, let me show you. This is what the advisor focuses on, but they have forgotten all about what's going on in the economy. Right now, what is happening? We just talked about it. Inflation is going up, right? So let's call this inflation. Inflation is going up and has been somewhat of a hot topic on the news. When inflation goes up, the Fed eventually will raise interest rates. But wait a second, the Fed doesn't have to wait to raise interest rates. They already have. Last year, we were close to zero. Now we're at like 2-point-something%. Do you think the Fed has raised interest rates? Yes, they have. They've gone up. And Steven's watching all your questions, folks. So I want to give some books away here. So now if inflation's going up, which drives interest rates up, what happens to the price of US Treasury bonds or all bonds? When interest rates go up, the price of bonds goes down. If you follow Warren Buffett, what does Warren Buffett say? Buy low. What's going down right now? 20 and 30-year US Treasury bonds. So what should we be buying? 20 and 30-year US Treasury bonds because they're of value. They're going down in value because interest rates are going up. But then let's now talk about the 800-pound gorilla in the room that the advisor says is stupid because you're only making 1.8 to 2.3. Who cares? Let's just pretend that you make 0%, because I'd be okay with that. None of you would be, your advisor wouldn't be, and your friends and family would probably call you an idiot, but I'd be okay making 0, and I'd buy US Treasury bonds. Because here's what I understand. When all this stuff goes up, eventually it all changes. It all changes. And eventually what's going to go down? Interest rates. Why would interest rates ever go down? Because the Fed wants interest rates to be low. And if the whole market crashes, it went down 569 today, maybe tomorrow will be more. If the whole market goes down, what's the first lever the Fed pulls? Think about COVID. Think about 2008. Think about the 2001 dot-com crash. What is the first lever? If any of you are thinking interest rates, you're absolutely correct. When the market plummets and goes down, the Fed pulls the interest rate lever every single time. I think it's automated. I think they have a robot there. It's all AI. Market down, pull the lever. Interest rates come down. So if we're at let's just call it 2% in interest rates, and they pull interest rates to 1% or lower, okay? What happens to the price of your bonds? This is the cool part about bonds, especially US Treasury bonds, because they're guaranteed by the US government. It is literally just a mathematical equation. I can tell you, depending on whether you own 20 or 30-year US Treasury bonds, the price of your bonds with a drop from where we're at just today down to where we were a year ago, you would make between 30 and 40% price appreciation on those boring ass bonds that you bought that are guaranteed by the US government that your advisor told you you should never buy because of this, which we don't even care. If in 2 years or even 3 years, we know that there's an impending market crash coming, and we know that impending market crash is going to force the Fed to drop interest rates. How many of you want US Treasury bonds now when it's going to be a risk-free 20 or 30-year increase? All of you should be saying, oh my God, yes. It should just be like you're getting so excited, you're like, oh my God, yes, yes, that's what I need. Why is nobody talking about this except for Harry Dent Jr., who will be at the 3-day training this weekend? That's right. One of the top economists in the world is speaking at our 3-day event, and he will be talking about this as well because he's no dummy. How do you think I learned this? I learned it in the Series 7 book, but it came back out when I heard Harry Dent talking about it. I'm like, oh yeah, that's a great idea. So you know what I did? I took action because learning something and doing nothing with it is foolish. I take action on things. And you know what? My treasury bonds that I own right now that I've been buying, if they make 1.8% in yield, how much money do you think I'm up on my US treasury bonds now? I will tell you, and I will show you if you want to see it, 6.58%. How many of you would be okay with a guaranteed 6.58% return on your money? Sign me up. Is that better than inflation? Yes, it is. Is it 30% increase in the price of your bonds, risk-free, okay with you guys if you just wait a little bit? Is that okay? Because it would be okay with me. I'm just trying to help you see what the hell's going on out there so you can understand the magnitude of what you're doing and what the wealthy are doing. Because this is what the wealthy are doing. You know who's piling up on 20 and 30-year bonds? Look it up. Giant mutually owned insurance companies. That's right. Giant mutually owned insurance companies are buying the hell out of 20 and 30-year US Treasury bonds. Why? Why do they always do that? Because they understand this. And insurance companies don't take on risk. They hate risk. You know what insurance companies do? It's the most boring thing in the world. How do insurance companies become as big as they are? Number one, they invest for the long term. They understand that investing is, like Warren Buffett says, a marathon, not a sprint. Number two, they control their risk more than anything else. They don't take risk. They don't even take gambles. They don't even play into speculation. They just invest for the long haul. And that investment is things like US Treasuries. You know what else they do? They move their money nonstop. in the form of loans, first secured loans. And who do they lend money to? That's right, banks. Banks don't have any money. They have your money. Banks need money all the time. And who do they get it from? Giant insurance companies, because that's where all the money sits. So if all the money sits in giant insurance companies, and giant insurance companies are the smartest, safest investors out there, period, because they can invest for hundreds of years where me and you will be dead in hundreds of years. They can. So they can do things that you and I could only dream of doing. And Warren Buffett would have, wet dreams thinking about investing the way insurance companies do, but he can't. So what does he do? He buys an insurance company that will outlive him, called Geico, and he does all this stuff that we're talking about. But yet we all do the opposite of what the wealthy do. So Stephen, anything you want to comment on that before I kind of get into this? Do we have any good questions I can get out? I went on a tangent and I need to get into this thing, and then we definitely got to cover self-directed IRAs.
Yeah, no, I think we're good, man. There's no questions really. And that was really good. I mean, it's a great explanation of everything. And just the idea, you talked about it before, we have all this, trillions of dollars of debt. I think it's like 28 trillion now the US is in. And, at some point they're going to try and pay for that. And, they have inflation, deflation, all that is, what we were talking about, how they can control some of that. So it all plays together, Yeah.
And let me go one step further, and you'll learn about this at the 3-day from Harry Dent. It's what all of you want is not inflation. The government wants inflation, because if the government keeps inflation going, it devalues your dollars and your spending power, which makes it much easier for the US government to pay back their trillions or however much debt they have. Is it even a fathomable, I don't even know if the government can ever pay the debt back, but the only shot they have is to devalue the dollar and pay all this debt back to China and everybody else with weaker dollars. But to do that, they got to weaken the US dollar. Does anyone think that's what the government's doing right now? Anyone see any signs of the government intentionally trying to weaken the dollar through modern monetary theory, economics? Let's print money and let's keep printing it and just printing it and printing it, making more money flow into the markets, making it just overflowing, and it just drives the price of everything up, which creates massive inflation. You're darn right. Absolutely facts. This is not any pie in the sky stuff. I'm just literally showing you factual data. You can double check it and fact check it and do all whatever you do. Everything we're telling you is the truth, but I have nothing to gain from telling you this. I'm not selling you Treasury bonds. Go buy them yourself. I'm not selling you gold or crypto or anything else. The only thing I'm selling you tonight is freedom to your financial world by coming to a 3-day event, which today we've got a special offer for the first 20 people. So now I'm going to sell, okay? Because now I gave you a bunch of stuff for free. So now I can earn the right to tell you this. You guys all need to join us this weekend. Friday, Saturday, Sunday. Oh, you got plans. Oh, there's a football game on. Great. You get the recordings and you can get what you want. You get to hear from Harry Dent, Solomon, who's going to teach you about 1041 tax reporting and how the wealthy don't pay taxes and how you can do this too. For the first 20 people tonight only, mark my word, this is only for you. You will not see this online. For all of you, it was $297 yesterday. For the first 20, it's a $197 ticket. And you get all 3 days, all the recordings, the file vault, and all the stuff we give you. So there is a code though. Steven's going to put the link up here for you. And the code is 2021. The code is 2021 because this is our last 3-day event we're doing this year. So that's why we've conveniently called this. The coupon code is 2021, which gets you a $197 ticket plus all of the extra stuff that we're going to give you, which is worth thousands of dollars, not hundreds. So for the first 20 that do that coupon code, you will get in at 197. If you actually go in there and you put the coupon code in and it doesn't work, it means it's 21 and you're paying 297. That's it. So I don't know why people would wait to do this. You should do this now because the first 20 get it done.
And while they hop on there and do that, Chris, let me just show you one time before we get into this, just so you understand the weight of what we're talking about. Let me just show you how much $1 trillion really is. All right. So that's a $100 bill. We can all relate to that. How many of you had a stack of $10,000 before? It's a little, it's not much. You look at it, you're like, man, that's really not a lot for $10,000, right? So, all right. So how about $1 million? So $1 million, you got it sitting there. All right. It's a little bit more, but if you've ever seen $1 million in Vegas or one of those displays in cash, it's not that much money, right? We've all seen that in Old Town Vegas, I'm sure, right? So, all right. So 100 million, we're getting a little bit more, there's yachts and some nice houses around where I live that go for 100 million. So that's what it would take to purchase those. All right. So $1 billion, right? When you hit billionaire status, now we're talking a little bit of cash, right?
Yeah,
to get to $1 billion, that's some serious work. That's some serious investing. And that's some serious smarts, right? So that's $1 billion. Now, what about $1 trillion? So 1 billion to 1 trillion wouldn't be that big of a difference, right? Keep scrolling. So remember, so that's the little guy right there. That was $1 billion. Now look at 1 trillion. So that was 1 billion. This is 1 trillion. The US is currently in what, about $28 trillion in debt and 100 trillion in unfunded liabilities or something. I mean, it's unbelievably hard to fathom how much money that is and what we're going to do to be able to get out of that. But that's why it's so important to understand what to do, what to prepare for, because something's happening. And when it happens, it's time to take advantage of it. It's time to get that opportunities going. And it's time to set yourself up, you and your family, for the future.
Steven, everybody's like, give me the damn code, dude, man. Trillion, billion, just tell me the code.
I said 2021.
No, they want the link. Did you already put the link in?
Oh, no, I got you.
Sorry. Yeah, you forgot the link. It's like, great, we got 2021. Where do we put that? Give them the link. And then I'm going to dive into this, folks. I'm going to teach you one of the biggest secrets of the wealthy. I learned this in 2014. And when I heard about this from Mike Baird, who's an incredibly wealthy and successful real estate investor in Utah, who also had a TV show, a very successful one, Mike Baird used to lend me money. And when he was lending me money, he was always lending from his private bank. That's what he called it. I'm lending from my private bank. And I'm like, okay, great, Mike, just give me the money. What are you charging? 15, you son of a bitch. He's charging me 15% on that money. I didn't care because it wasn't about the cost. It was about the opportunity. Cost is only an issue in the absence of value. So I gave Mike his 15%. One day I'm out in Utah and I'm just at the Cheesecake Factory and I'm talking to him and I'm like, Mike, I got to ask you, like, this private bank, what is it? Is it your self-directed IRA? Like, does your family own a bank? Like, what is this thing? And he starts telling me, he says, no, it's a specially designed and engineered whole life plan. I'm like, nah, dude. I'm like, it can't be. Whole life doesn't work that way. And he starts telling me about how he has access to his money immediately in the first 30 days when he deposits it, how his money grows even when he takes out because he's earning uninterrupted compound interest on every penny he puts into this private bank. And even when he takes all the money out to lend it to me, his money never stops earning interest. I was like, Mike, I'm the financial advisor in Cheesecake Factory here. So let's recognize the expert in the room. Whole life don't work that way, buddy. I'm sorry. It doesn't do any of the things you're saying. So whoever told you that is lying to you. Mike leans into me and he says, all right, wise guy. Okay, smart guy, Mr. Financial Advisor. Tell me this. If it doesn't work that way, how have I been lending to all of your deals using this exact system? And how have I been earning uninterrupted compound interest every step of the way while you've been paying me 15% on top of that? You see, Chris, guess what he said? You see, Chris, I'm not making money once. I'm not playing the same game you are. You know how to make money once. You're doing all this fancy stock stuff and good for you. I'm making money twice and I own nothing. You're the one taking all the risk in the real estate. You're the one doing all the stuff. You're the one paying me 15%. I'm just collecting checks in the mailbox while my money is still working for me every single day, every hour of every day, and it will never stop going up. So if it doesn't work this way, how am I doing it? I said, touche, teach me how to do it. And he sent me over to Brent, who Brent showed me a 90-minute video that I had to watch. So let's get into this. I'm not going to do the full 90-minute presentation. Folks, listen. If you've seen this, great. This is different. I've never done this presentation to any of you. I did it one time at the Avengers Mastermind out in California last week. It's the only time I've ever done this presentation to any group. In this presentation, Stephen, hold on. Let me just get this up here.
I'm here. We broke the internet, so the website's not working. I'm just going to call and get it fixed for him.
What? Oh, our website's not working? Oh, that figures. All right, well, just real quick, let me get this started here. Can you actually see the right screen? What screen are you seeing?
I have 50 things up. Yes, correct. Yeah, it looks good.
Okay, that's the right one. All right,
people that don't have their own bank are grumpy.
Yeah, darn right. See my little dinosaur there? People that don't have their own bank, you know what they are? They're damn well grumpy because they haven't yet learned how to move their money. All right, so let's get into this. All right, so we're going to skip the next slide because we don't need to see my intro. You all, I think by now know who I am. But this is
get out of here. I'm not banking with you. Not you. Not you. Nope. I'm going to be my own bank. I'm not banking with you. Uninterrupted compound interest. Start your infinite banking policy today. Bye-bye, big banks.
Now that video will never get old because it just talks about getting rid of the big banks. Now, real quick, in that I want to know, what is that big guy's name? Okay. The first person that tells me gets this book. No BS. What's his name? The guy that was in that video you just saw. First person. What was his name? Darth Vader is his name, but what was his real name? Yes, we all know Darth Vader, but who was he really? The man behind the mask. What was his name? For the book, No BS, Wealth Attraction in the New Economy by Dan Kennedy. What was his? There you go, Anakin. There you go. So who just said that? So Darth Vader, they did both, Anakin and Darth Vader. So we got, I'm sorry, buddy. I don't know how to say your name. Khurram. Get us your address and email it. So I'm just going to write this down. Khurram. After I put your name on the book, it's your responsibility to make sure that we get your address and I will mail that. So there we go. That's how we're going to play this game. Yesterday, we talked about the 5% and the 95%. Not going to go into that again. You are all the 5%. So if you're the 5%, then you are part of the 5 that will be financially successful at the age of retirement. The other 95%, they're not here. They're doing something else. All right. You already know my story. We're not going to get into that. You know, this concept I'm going to talk to you about is in lots more books than just these, but Second Chance by Robert Kiyosaki. I'm not giving that one away today, but I do have that to give away. Tony Robbins' book, Money Master the Game, Becoming Your Own Banker by R. Nelson Nash, and my 2 books. All of these books talk about what you're about to hear about. But the problem with what you're about to hear about is this statement by Mr. Will Rogers. Mr. Will Rogers said the biggest problem in America is not what you don't know. Listen to that. The biggest problem in America is not what you don't know. The biggest problem in America is what you think you know that just ain't so. Why do I put this up every time and constantly say this? As a reminder to me that I don't know everything. I'm a perpetual student. And every time I think I know something, like I did when Mike, Baird told me that's how this private banking works, I thought I knew what I didn't know. Just like he says, it's what people think they know that just ain't so that gets them in trouble. Your advisors think they know what they don't know because, hey, I get it. They're advisors. Like, they should know everything, but I'll almost guarantee you they don't know about this. All right, now we're going to give some books away. You guys ready? I'm going to be watching. You guys ready for this? All right, so it's not Anakin Skywalker we're going to be talking about here. It's money. And the very first question, first answer that gets this is, I want to know, what is the definition of money? What is money? First person gets a book. What is money? And we're going to give away the 12-week year. What is money? It's a tool. Okay, who said? All right, John. John is the winner. John, whoa. All right, hold on. I got to go back up. John Steiger, I think I said that, or Steiger, get us your address. You are right. Money is nothing more than a means of exchange. So John gets this book, The 12-Week Year. Get more done in 12 weeks than others do in 12 months. Money's a means of exchange, always has been. It's money for food, food for money, money for car, car for money, money for house, house for money. All right, you guys ready for the next one? You guys are doing great. And I love these answers. Money is power. Money is a trading tool. Money is a means of exchange. It's just a means of exchange. I don't care if it's little coins. I don't care if it's green money, red money, blue money. It just is used to exchange. And if the money can't be exchanged, i.e. Bitcoin, we can't really exchange Bitcoin for much of anything. I mean, you can say it's a means of exchange, but it's really not quite there yet. It's in its infancy stage. It's like my daughter, 16 months old. That's Bitcoin right now, infant. It can't be used as a true means of exchange because there is no exchange. There's no market that will take that yet. And now I know Tesla did, and then they didn't. And maybe now they do. Who cares? Next thing, I want this answer. First person that gets it. What company in the world uses compound interest? Come on, go. What company in the world uses compound interest? The book we're going to do for this one is a hardcover copy. And what is the title of this book? This is interesting. Okay, mutual funds, none, banks. All right, come on, let's keep going. All right, this book is this is the real estate recipe. Cool. It's a nice hardcover book. Let's see. Insurance companies. What do we got? The wealthy insurance companies, insurance banks. Holy cow. Wait, who? Craig got it. He's the only, Craig, are you the only guy on here that got that? Good Lord. You are, my friend. Craig, what's your last name here? Craig, where are you? Here we go. Craig Young. Craig Young won this book because what was his answer? None. There's not a company in the world that uses compound interest. You guys had great answers, stock companies, credit cards, schools, insurance companies. Hypothetically, like you might be able to find one or two ways that they're maybe kind of using compound interest, but they don't use compound interest. Listen to me. Banks, which is the most common answer we saw today, don't use compound interest. They charge you compound interest. Sure. They pay you compound interest in the money you put in those CDs, which are the worst place you can put your money, but they don't use compound interest at all. You go into the bank and you take this $100 bill I'm holding. If you can see me, I'm holding a $100 bill, and you deposit this money in the bank. Does the bank put your money in a little box in the back room? Absolutely not. What does the bank do? The bank takes your $100 and everybody else's $100 deposits, and they loan that money out. They move that money in those little glass cubicles. Banks move money, folks. They don't use compound interest, because compound interest, the way that we all know it, requires us to park money somewhere and leave it sit. Banks do not do that, because they understand when money sits, it's not in motion, and everything in the world has to be in motion. Birds are flying, air is blowing, waves are crashing, cars are moving, planes are flying. Everything's in motion except for your money, because you've been taught to believe a false reality that your money has to sit in order to earn compound interest. True or true? Absolutely. You all think to make your money earn money, it has to sit somewhere. Sit in a brokerage account, sit in a 401k, sit in the bank account, sit in a CD. You get the drift, right? You think your money just has to sit there, because if I take that money out, I stop the flow of compound interest. And you know what? You're absolutely right, but you just haven't taken that next step to learn how to earn uninterrupted compound interest, which is what Albert Einstein called the eighth wonder of the world. And he said, those that understand it, earn it. Those that don't, pay it. You need to get on the understanding part so you earn it. And you also need to understand how you can actually put your money somewhere, earn compound interest, but then take your money out and earn money a second, a third, a fourth time without interrupting the flow of interest on the first dollars that you deposited. That's the magnitude of what I'm about to show you. Okay. Are your dollars worth more now or in the future? First person gets how to buy and sell apartment buildings. Is your money worth more now or in the future? All right, right there, John. All right, John, you already won one. Craig, you already won one. We're going to go with Laurel Gibson. Sorry, trying to spread the wealth here. We got to give, give, give. That's the universal law. The more you give, the more you get. We can't give people 2 books. All right, so Laurel, get us your address. You got this book. That was an easy one. Okay, that was a throwaway. You're right. Your dollars are worth the most money today. If you don't believe that, some people actually do. I asked it a crowd of 347 people last week at Secret Knock. You know, I asked the same question, and there was one person that said in the future, and they said, yeah, but if I invest the money, it's worth more in the future. You missed the point, because how many candy bars could you have bought 20 years ago with $1? The answer is more than today. Your dollars are always worth the most today. I can't give a book away for this one because you already know the answer. Are taxes going up or down? Of course, they're going up. And if you don't believe that, what rock, please tell me what rock you're living under, because I want to come visit you. I literally don't want to know the shit that's going on. And if you think that taxes are going down, I need to know what rock you're at. Give me the address. I will be there, and I'll hide under the same damn rock you're under. And then what do you know about 401ks? Let's challenge you. So everybody got the now question, but give me, what do you all know about your retirement account? Let's hear it. And then the book I've got here, The Only Negotiating Guide You Will Ever Need, 101 Ways to Win Every Time. So what do you know about your, okay, holy crap, we got some smart people on here. Hold on, who said that? Because you got it right. Ryan John knocked it out of the park. Like Babe Ruth, man. He swung for the fence and he got it. Because what was his answer? What was his answer? Not much. Ryan John is absolutely correct. A lot of people think they know a lot about their 401k, but most people, I will tell you, know whether they're invested in moderate, conservative, or high-risk mutual funds. Maybe they know a thing or two about match and how that works, but outside of that, they don't know squat about their 401k. But Ryan John, you got yourself the book. Get us your address. Get it over to Stephen in an email. But you're right, okay? Hidden fees. Some of these answers are freaking awesome. You guys having fun with this stuff? Because this stuff's awesome. I want to go back to the retirement account. Because retirement accounts right now, in my opinion, are one of the biggest lies being told to people out there, because everybody's got one of these things. You know, everybody's been taught from a young age, myself included, that when you get a job, what do? You put money in the 401k. And you ask nicely, hey, do you guys have a match? As if, oh my God, I don't know if I should ask this question, because we've been taught not to talk about money. Well, just wondering, you know, before you know, I get the job, does your 401k have a match? Well, yes, it does. It matches 3%. Oh God, yes. Yes, it has a match. Thank God. Now I can plow my money in this. They've lied to us, because what are you doing? Look at all these things that we just talked about. What company uses compound interest? Our dollar's worth more today. Our taxes going up. What are you doing when you're putting money in a 401k? Okay. Here, let's give a book away about that. I want to know this. What are you doing when you put money in a 401k? First person that gives me an answer I like, it's Richard Branson's book, The Virgin Way. Okay. Richard Branson's book, The Virgin Way. All right. So we got nothing. Okay. Just sitting there, giving him money to invest, giving them the money to invest. Let's see. Keep going. What else? Nothing. All right. Okay. Well, I'll tell you what, making the bank more money, giving it to the bank, giving control. Oh, I like that one right there. We're going to go with that. Michael David, giving control away. That's the best answer I got. I didn't really have a set answer for that. I was just looking for the best answer. When you start taking your securities licenses, there's not a right answer. There's the best answer. It's very difficult, but Michael David got Richard Branson's book. Michael, I have your address, but please get it over to Stephen. Here's the deal. With your 401k, you are defying all the things we just talked about. You're taking today's dollars, which are the most valuable dollars, and you're giving them away. You're putting them in a place where you can't take that money back for 5, 10, 15 years until you're 59 and a half. Are your dollars worth more today in the future? You all said today. That was the one answer everybody got right. But yet when you put money in a 401k, you're giving your best dollars, your most valuable dollars away. You're putting it in a 401k for some future use where you're then going to be paid back with weaker dollars because of inflation. You see how this stuff that we did, this isn't planned. It just ties right back in because money is so simple, but we just try to complicate it. Taxes, they're going up. All of you said that they're going up. So we're going to put our money in the 401k, a traditional, not a Roth. We're going to put our money in a 401k and we're going to get what? A pre-tax deduction. How freaking cool. I get my paycheck and the 401k came out before it got taxed. I didn't have to pay tax on that money, man. I'm winning. And then 5, 10, or 15 years later, you take the money out and what are you going to pay tax on? The entire amount at a higher tax bracket. You put the money in at a small amount and you got a pre-tax deduction to then take the money out and pay tax on the entire damn harvest. You paid, or you took the tax deduction on the damn seed and you paid taxes on the harvest. Are you an idiot? No, you're not an idiot at all. I'm not beating up on you. You've just been lied to. That's all. We do things with money we would just never, ever do with things that money buys. You would never, ever go out and buy a loaf of bread, put it in your freezer, and then wait 5, 10, or 15 years to eat the bread. It'd be freezer burned and unedible. You just wouldn't do that. Would you buy your dream car and then wait 5, 10, or 15 years to drive it? Of course not. Would you buy your dream house for your significant other and right when you're ready to move in, tell your significant other, honey, I'm sorry. Sweetie, I didn't tell you, I lied to you. We can't move into this house for 5, 10, or 15 years. We got to treat this purchase the same way we've been treating our money all these years. Folks, we do things with money we would never do with things that money buys. And we wonder why we get stuck on the financial hamster wheel, going in circles or riding the roller coaster ride up, down. I got money, I lost it. I got money, I lost it. I got money, I lost it. Why? Because we've been buying into the big lie of giving up control of our money to somebody else who we think is better at managing it, or we think, oh, this pie in the sky thing called retirement, where we someday 59 and a half, 65, 75, when are you going to retire? When you actually retire, you're going to ride off into the sunset? Bullshit. Look around. Retirees, what are they doing? Well, the ones that stop working, what is the statistic of what happens to the people that retire, sit around and do nothing but watch TV and just say, I'm retired, I'm relaxing? They die. Their body shuts down. Their body doesn't have a purpose, and they don't have a purpose. And all of a sudden, the statistics say it, not me, they die. You don't want to be on that side of the coin. So I beat that up enough. So I do this one often about buying a car, but I'm going to skip it because I want to get down to the nitty gritty. We've seen this enough. All this example does is it shows that it is possible. Here, listen to this closely. It is possible to earn more money earning 4% when you're paying 6%. People ask me all the time, Chris, can I make more money if I'm paying 6% on a loan, but only earning 4% over here in the bank? Absolutely. You just got to understand how money works. The math doesn't lie. Right here, the car loan, this is an example, over 5 years, a 60-month loan at 6% is $28,999. But then the person left the 25 grand in their bank that they found, which is a really good bank earning 4% for the same exact time frame, 60 months, 36 months, doesn't matter the time frame. They made $30,525. How is it that $25,000 earning 4% made more than paying 6% on the same exact dollar amount of a loan? Simple, folks. The 25,000 was participating in uninterrupted compound interest. There was nothing interrupting that. It just grew every year. First year, 25 grand. Then the next year, 25 grand plus the 4% interest. The next year, compounding on a higher amount. You see, one was going up, one was going down. It's math, folks. Math never lies. People lie all the time. You don't have to listen to me. Check the math. The money multiplier method is simply what I learned from Mike Baird, okay? It consists of three things. Three things are what the money multiplier method consists of. Number one, we need a machine. I let the cat out of the bag. What is the machine? Who can tell me what the machine is for this book? REI Secrets by Joe McCall. Daily Nuggets of Real Estate Investing Wisdom. What is the machine? That's right. Who said that? Juan. See, you got to be quick. It's like Jeopardy, or is that the one, or Jeopardy, or whatever it is right there. Insurance companies. John, get us your address and I will mail this book out tomorrow. I'm sorry, not John, Juan. Juan, M-A-T-T-A. You got that book, Real Estate or REI Secrets. So the machine is nothing more than a specially designed and engineered whole life insurance policy. Now we'll get into that in a second, but the machine only works if you participate in this next one, and it's called the marathon. Building wealth is a marathon. It is not a sprint. Any of you that are here to learn some get rich quick scheme, this isn't the place. It's not what I teach. And go find someone, selling some high priced, overpriced option strategy that will probably get you to lose all your money. I'm just picking on some of that, but that might be a bad example. But this isn't a get rich quick scheme. Okay. This is something that will take time. The same reason Warren Buffett is as wealthy as he is because of time. Life is also a marathon. It is not a sprint. So slow down and understand that to build true wealth and keep it, you have to play this. And that is the marathon. And lastly, and I think single-handedly the most important thing, you can't build wealth if you don't have an end destination. Where are you going? If you want to have all this money and you want to be rich and wealthy, you're like, why? What's it for? What's the end destination? What is your perfect day? If you could live your perfect day every day, could you literally sit down with me for a half hour and from start to the end of the day, from the moment you open your eyes and take your first breath to the moment you close your eyes and go to sleep, can you tell me everything that happens in your perfect day? If you can't tell me what your end destination is. You need to understand where you're going before you start to try to get there. You don't get in your car and just say, oh, we're just going to drive. I don't know. That's the address. All right, we're going to get there. I don't know how to get there, but we're going to get there. Maybe back in the day we did that, but today we just put the address in the GPS and we follow instructions and we listen to it and it gets us there very quick. That is the last one. Maybe it's a millionaire, maybe it's not, but we need a goal. So the machine, let's get into that because a lot of people stop when I say whole life. You'll notice now freely, I openly say whole life, whole life, whole life, whole life. Who wants to tell me the whole life is a terrible place to put your money? And a bunch of people say, well, yeah, it is. It's Dave Ramsey says it, Susie Orman and all the gurus say that whole life is a terrible place to put your money. And I say to them all, I say, yes, you're absolutely correct. You weren't expecting that answer, were you? Whole life, traditional whole life, the whole life that you buy from your broke ass brother-in-law, the whole life you bought from Northwestern Mutual, the whole life you bought from the insurance store down the street, probably is one of the worst places you can put your money unless you're looking for end protection someday when you die. Is that what you guys are here for? Are you all here just to know how to put money into something that's going to pay a bunch of money out someday when you die? I don't think so, right? I think you all care more about the money you have to use today than you do about the money that someone's going to get the day you die. Am I right? True or true? Because I want to make sure you guys are in the right place here, not the wrong place. So if you care more about the money that you have to use today for the goals that you have today with your most valuable dollars, which are today's dollars, you are in the right place. But the one thing you have to then understand is that this machine, which is nothing more than a dividend paying whole life insurance policy from a mutually owned company, the first thing you got to understand is this isn't the whole life you bought down the street. This isn't the whole life your advisor sold you for protection. This isn't the whole life that your broke ass brother-in-law sold you. This is a very specially designed and engineered whole life that is designed to do one thing and one thing only, and that is be a banking system. To create this whole life, a financial advisor or us, because this is all we do, are required to design the contract so that we get paid up to 90% less. Did you hear me? We get paid a commission. You never pay us. You never write us a check. You'll never give us a penny at the money multiplier. We get paid from the insurance company, but the insurance company pays us up to 90% less than they paid your advisor when we design and build this whole life for you. Why? Well, the whole life your advisor, and I don't mean to keep picking on advisors. Let's talk about your broke ass brother-in-law. That whole life that they sold you probably was not in your best interest from a cash building or wealth building standpoint, but it might have been in your best interest for a death benefit standpoint. But in order for them to switch the tide and make that whole life work so that it benefits you today with giving you access to your money immediately in the first 30 days would require that broke ass brother-in-law taking a cut in their commission of up to 90%. And if you ask them to do that, go to your advisor, say, hey, I want a whole life, but I want you to build a whole life that pays you 90% less so that I have 90% more. They will tell you that's not possible. That doesn't exist. Nonsense. The banks, which are the #1 purchasers of whole life insurance in the world, figured this out a long time ago. Look it up, folks. It's called BOLI, B-O-L-I. Banks do not buy normal whole life insurance. Banks buy a very specially designed whole life that my thing isn't working. This is called, they call it BOLI. Look on Bank of America's balance sheet, and you will see that Bank of America owns more whole life insurance than they do all the land and buildings. They're not stupid, folks. They know something you don't know. That's all there is to it. When we design these plans, we design them so we make less so you have more. Grandiose idea. Zig Ziglar said it best, help enough people get what they want and you will get what you want. So in order for us to help you get what you want, we got to give something up. We got to give our commission up. That gives you access to more of your money immediately in the first 30 days. You guys getting what I'm saying? A Ford Focus. If you went to the Ford dealership, a Ford Focus that you look at the dealership, it's a mediocre car. It gets from point A to point B, relatively slow and good on gas. But Ken Block, who's a world rally cross driver and has tons of movies, he drives a Ford Focus, doesn't he? That's right. But Ken Block's Ford Focus goes 130 miles an hour around turns in full control. Do you think that those are the same Ford Focuses? No. Ken's was designed and engineered to do that. The other Ford Focus was designed and engineered to be a mediocre car that gets from point A to point B. Your whole life can be designed just like that car. Your whole life can be designed just like a rocket. Some rockets go to Mars, some rockets go to the moon, some just drop satellites off. They're all designed and engineered differently. So is whole life. Now that I beat that up because so many of you have a misconception about what whole life is and how it can be used that you're missing the big point. We use this as a machine. And why? Well, let me show you why we use this as a machine. How does a bank operate? Because we're talking about banking. Forget about the whole life for a second. The whole life is just a machine. We're going to put money in. I'm going to take 100 or whatever. I'm just going to use a $100 bill. I'm going to put a $100 bill in my specially designed and engineered whole life. And then I'm going to take some of that money back out. Okay. I'm just going to put money in and take money out. Put money in and take money out. Why would I do that? Well, because if I always earn uninterrupted compound interest on the money that I put into it, even when I take it out, because when I take it out, I'm not using my money. So my money never left the account. I'm using the insurance company's money because the insurance company in a contract said, hey, listen, anytime you want to use your money, you can take your money out. And what we'll do is we'll loan it to you from the general account. So your money doesn't have to leave the account and we'll just take it from your death benefit. We'll loan you part of your death benefit. Oh, great. So you're giving me a loan. Like, how do I pay this loan back? And the insurance company says, no, you don't have to pay the loan back if you don't want. You can, but you don't have to, because if you don't pay the loan back, when you graduate, the day you die, we're just going to subtract the loans that you didn't pay back from your death benefit. That's all. And you're just like, whoa, like Bill and Ted's Excellent Adventure. Whoa. That's it. But you first got to understand banking, because that's what we're teaching here. We're not teaching you to buy whole life insurance. No, we're just teaching you how to use that because it's the only vehicle, only machine on earth that can do what it does. And we're teaching you how to use that to bank, to take back the banking functions in your life. That's it. If you went to the bank and you put 100 grand in the bank, that would feel great. And if the bank paid you 4%, you think you died and went to heaven. But does the bank just put that money in a vault? No. Vaults don't have money anymore. They lend that money out. They take your 100,000 and they lend it out to your neighbor to buy a house. They pay you 4, they charge your neighbor 7. Your neighbor pays the seller, the money goes back in the bank. The bank doesn't like deposits because they're liabilities. So the bank turns liabilities into assets, just like Robert Kiyosaki talked about in Rich Dad, Poor Dad, and they loan the money back out to your coworker to buy this BMW M4. They're paying you 4, they're charging your coworker 8. That's a great idea, great spread. Car dealership puts the money back in. You take the money out from the bank as a loan to do a home remodel because your wife wants a kitchen or you want an ammo shed or something, whatever. And you pay 9%. You pay the contractors, money goes back in. They're paying you 4, they're charging you 9. You go to Las Vegas and you gamble. and you lose and you put it all on the credit card. You don't want the wife to know. It's okay. What happens in Las Vegas, from what I hear, stays in Las Vegas. But you go to the bank and you say, hey, I need a debt consolidation like now. And they do that. They give you a debt consolidation loan at 12%. They pay your credit cards off. The credit cards put the money back in the bank. Let's do the math here. 4 minus 7, remember your neighbor's house? 3% spread. 4 minus 8 for your coworker's car, 4% spread. Okay, 4 minus 9 for that home remodel loan, 5% spread. Look at this. Look at how this is working. See how it just keeps going up over time. And as they keep moving the money, the spread just keeps going up. 4 minus 12 is an 8% spread. The bank made 20% and you made 4. So how much did the bank, for this book, Getting the Money, that's what this book is called, how to raise $250,000 in private, this is a good one, in private money in the next 30 days. You guys want this book. How much money? Oh, you cheater. I didn't even ask the question and look at, he put the answer. Let's just see how many more people get it. How much money is the bank making on your money? How much? 17%. Somebody did the math. Let's see. What else? Compounding. What do we got? Come on. 5. Yeah, it's just because John's cheating. John heard the other guy got it right already. So I got to give it to the first guy, which is Eric Height. Okay. Eric has obviously seen this before because nobody ever gets that before I ask the question. But Eric, I'm a team player, bud, and I'm going to give you this. But I want everybody to understand the math is right on the screen. The bank didn't make 20%. The bank didn't make 20 minus 14, which would be 16%. The bank made 5 times more. 4 divided into 20 is what? 5. So the bank made 5 times more, which is 500% more than you did. So Eric Height gets this book. Get us your address and I'll mail that book out. The bank made 500% more than you did on the money that you left there because you have been tricked and taught to give up control of your money. Simply put, folks, this is why we need to take back the banking functions in our life. This is why we need to then change the game and stop allowing the banks to control your money. Stop allowing Wall Street to control your money. Stop allowing the 401k companies to control your money. Take back control. Just mimic what the bank does. And this could be you. But then you're thinking, wait, but Chris, I can't use other people's money. You're right. But you're making deposits into your traditional bank right now. Imagine if you just changed one thing, just one. You changed one thing and that one thing changed where your money goes first. That's it. And where is that one place that your money is going to go first? You're right. That's specially designed and engineered whole life policy like we've been talking about, because that is going to now be your bank, because that is the only way that you can earn uninterrupted compound interest on your money in perpetuity in a guaranteed basis contractually from a giant mutually owned insurance company. And it's the only way you can do it with all that growth being tax-free, protected against judgments and liens, and there is a legacy place. Someday when you graduate, even if you did all of this and you used all the money, there's money that's going to be left for your family. How many of you are now liking the sound of that? Because that's the magnitude of what we're talking about. But the second I said whole life, you're like, this sucks. But now you're like, well, I like that. Great. Then do what they do. Here's the flow of money. You saw this on the screen behind me earlier. I just want to give you an idea of how I have used one of my policies, which I have 7 of these policies. I don't want 7, but you have to build your banking system over time. I started my first policy with a bit over $200 a month. My last policy was $30,000 a year. I have 7 of those. Okay. So I just put more money in, but here's the deal. When I first learned this from Mike, I had a bunch of debt. I had lines of credit with a bank called Key Bank. And Key Bank, these are unsecured lines of credit, was charging me 9% interest. I never even thought 2 thoughts about like, well, Key Bank gives me a line of credit when I need money for my flips or my rehabs. I just take money from the line of credit and they charge me 9%. No big deal. I make a monthly payment to the bank, right? This is how all of you operate. You are all doing the same thing I used to do. And you never even think there's a problem with it, do you not? Tell me yes if you see a problem in this. Most of you don't. There's no problem here. You're using the bank's money and they're charging you 9%. So you gladly make a monthly payment. But that monthly payment you make every month for that money you used from their bank, that money's gone from your family forever. I woke up to this and I said, I want to be the bank. BYOB me, man. And I don't need any beer. I just want to be my own bank, which is BYOB. So what I did is I said, all right, well, here's the deal. I'm going to play the marathon and I'm going to start saving money in this right over here on the screen, the TMM policy. Okay. I'm going to start putting money in my policy. And then I got up to 23 grand in my policy. So I owed Key Bank 23 grand. So what I did is I took a loan from my policy. Again, the insurance company lent me part of my death benefit and they do charge me. They charge me 5%. when I take a loan. Today, I use a CV line of credit, from a bank against my cash value. So my borrow rate and my cost of capital today is 3%, not 5%, but this is how I did it then. So I paid 5% to use $23,000 of my death benefit. Most of you would hear that and you'd be like, well, that sucks. It's my money. Why would I pay interest on my money? Well, would you be okay paying 5% if the insurance company paid you 6% on every penny of the money that was in the policy, even though they gave you $23,000 of it? Yeah. If you do the math right, that's a 1% spread, right? Sign me up. And next year it's more than 1%. And the year after it's more than 1%. I'll show you that in a second. So I took the 23 grand. I paid off Key Bank. I no longer owe Key Bank $23,000. So what I did then is I took the next and most important step. Write this down and pay attention, because this is the most important part and the most important thing I can teach you. I realized that I was okay giving their bank money every single month to the tune of $289 a month. Why would I have a problem just changing the name on that check that I used to give to Key Bank to Chris Naugle? I just changed the name. Instead of writing Key Bank, I wrote Chris Naugle and I put $289 a month. And then I got sick of writing checks, so I set up a bill pay. Chris Naugle is going to get a check for $289 for the next 36 months, because that's how long it would have taken me to pay off Key Bank. And I just changed where that money goes. And I send that $289 back through their bank, because I got to clear that money through my bank and my segregated bank account is just a checking account at Key Bank. Let's just call it Key Bank. Okay. And I just do it there. And then I immediately then take that $289 and I take it from that segregated bank account. And I just use that for books and records. And I then send that money with a bill pay back to my policy. Do you see, there's that circle again. I took the money from my bank. I paid off their bank. I took the money I used to give to their bank and I paid it back to my bank. How many times do you want to do that? Every time. Because that is the coolest thing in the world, because every dollar that you ever spend on all the things that you ever buy goes back into your bank, not their bank. And the whole time that you're doing that, you are still earning interest on every dollar of money that you put into your policy. And not only that, remember, I was paying Key Bank 9%. So let's just do the math. What is 9 minus 5? Okay, some of us are like 9, 8, 7, 6, 5, 4. Okay, some of you were thinking that way. That's how I used to do it. 4%. Your spread is 4%, but no, it's not. You just did the math. You're like, all right, my cost for money is 5. I was paying Key Bank 9. The difference is 4 between the two. Chris, that's right. It's not, because you're making 4% spread, but your money never stopped earning 4% guaranteed plus the dividend. Now, here's the bad news. I got some bad news for you. 4% guaranteed is what these contracts pay right now. Come December 31st, 2021, any day after that, that changes. I don't know what the guaranteed rate is going to be. Some of them are going to be 3.25. Some of them are going to be 3.5. Some might be 2. It's not going to be 4 anymore. There's a fire sale on this, folks. Stop sitting around waiting for something to happen and get it done, because, hey, pretty soon your guaranteed interest rate is going to go down. It doesn't mean this isn't going to work. It just might not work as good as what we're showing. So does that make sense to all of you? Now let's get into the actual way I use it today. I paid off all my debt. And some of you are thinking, yeah, Chris, that's great, but I don't have any debt. And if you guys get questions, put it in the Q&A. We'll get them at the end. So what I do today is I find people like many of you who are real estate investors, and I loan the money from my policy to real estate investors at a rate of 12%. I became the bank. Just like Mike Baird was doing to me, I did the same thing. I just mimicked the wealthy. Mike Baird was just my model. And I take money from my policy, I just use the same 23 grand, cost me 5, and I lend it out at 12. And then when I do that, I take the monthly payments from whoever I lent the money to, and I get that money back into my policy. I make the spread between 12 and 5, plus I never stopped making money on every dollar of that money. You take the spread. That's what the whole game is. But see, here you now got to understand compound interest. You guys are doing simple math. I just gave it to you. All right, 12 minus 5, plus I'm maybe making 6 with dividend on the policy. Great, got it. No, you don't. Because how about these numbers? You see, over time, just like Albert Einstein knew, and just like he explained, money compounding builds. And the return on that money builds because you're always compounding on a higher amount. So this is that same policy. This is my policy at the age of, this is 5 years, so not quite. So I'm 44, 49, 5 years, we'll call it, because this is my newest policy. I put in 30 grand in the 5th year. The 5th year, my plan grows by 33,000. Can anyone do the math? It's a difference of $3,028. So that's how much money I made. I made $3,028 in the 5th year on that 30 grand I deposited. If we divide the 3,028 into the 30,000 that I deposited that year, my cash on cash return is 10.09%. So now let's do the math backwards. 10.9 minus the 5% that I got to give the insurance company, that's 5.09% I made. Let's go down to the 10th year. See, the same thing. This is compound interest. This is what you need to understand. Most powerful thing in the financial universe. I put in 29.9. My plan grows by 38. That is a 29.97% cash on cash return. And some of you are thinking, yeah, but Chris, how much money did I put in 30 grand over? You're doing the compound interest game. You miss something if that's the game you're playing, because remember, I'm putting money in this and I'm taking money out. And I'm using that money to go make more. Maybe I pay off debt. Maybe I buy a car. Maybe I lend it out to one of you. Maybe I buy crypto. Maybe I buy a stock when it goes down like it did last year during COVID. My money's always in motion. The only return I care about is the return I'm making on the new deposit that I put in, because all the other money I put in, I've already taken it out. That money's already out there working for me, making me more money. You see what I'm saying? It's the cash on cash return that will change your life. The compound interest, or I'm sorry, the cumulative return, that's old school stuff. That's what you did in your 401k. That's what you did in your brokerage account when you had to park money and never take it because you'd interrupt it. You don't have any interruptions now. You have the ability to use the money without interrupting. So this is how it works. Look at the math. 10% in the 5th year, 29% cash on cash in the 10th year, 143% in the 15th year, 225% cash on cash in the 20th year. Should I keep going? You can read the numbers. This is the power of compound interest. This is how money works. Once you tap into this, this is just the ice. This is just the start. This is the first place your money goes. This is where your money starts. What your money makes in the private loans, in the crypto, in the stocks, or whatever you're investing your money in, that's on top of this. Now, do I have your attention? This is seriously the biggest secret of the wealthy. Because I don't meet many wealthy people, multimillionaires and billionaires, that aren't using this. And when I ask them, sometimes they look at me with this dumbfound look like, of course we're using this. Like, why would you even ask us? You already knew. Oh, of course. Yes, I'm sorry. I just had to make sure, man. I just had to make sure. So with that being said, this is how we got to play the game. We don't play the traditional bank game anymore, because when we put 100 grand in our bank and we take out 27, the bank's only paying us interest on 73, like you see. When we put 100,000 in this specially designed whole life policy, the money multiplier policy, and we take 27,000 out, we're still earning interest and dividends on $100,000. It's a different game that we're playing. And if we were to use this for retirement, this is the game that we're playing in retirement. You can see the numbers. I put in 30 grand. The first year I don't have 30 grand to use. I only have 27. That sucks. Second year I put in 30 grand. Oh my God. I don't even have 30 grand to use the second year. My plan grew from 27 to 57. So I'm close, but I'm not there. But every year after the third year, my money is growing at a higher velocity than what I'm depositing because of compound interest. And it just keeps on going on. And if I were to look at even the cumulative return, the way that you look at things, so I always like to humor people. If I'm 65, and I better hope to hell I look better than that, at 65, I would have put 431,000 into this policy. I would have a cash value of 722,000, which is a cumulative return, boring, old way of thinking, of 67%. Does that suck? No. But am I making more than 67? You're darn right I am. Because all my money, all $722,000 of that money is out there working, doing something. So I'm making way more than 67. These are more numbers, and I just kind of put them all together to show you cash on cash returns on how this money really works. And you can see it here. So all the returns result in a great retirement plan, but the great retirement plan, in my case, would pay me $93,000 tax-free a year. And I'd never recapture the money in retirement. I'd just strip the plan dry. But the beauty about this, like this last slide showed, is when I'm doing this, you got to understand that 93,000 that I'm taking out, I'm making money out there on all the other money that was in there. I'm just double dipping here because I'm making money twice. Just like these people, Bank of C&M Jones, they were 350,000 in retirement accounts, 10 years from retirement. They had trouble. They were in trouble. They came to us and they said, how can you help us? Well, we said, how much are you saving? 13,000 a year. Great. Let's save that, but let's change where that money goes for the next 10 years. 350 plus the 13,000 over 10 years. If we just put money in and took money out and made 9%, your money would be $1,026,000. And if then we just took that 1,026,000 and we kept using that and we're the bank making that same 9%, that would be $92,347 a year, $76.95. These people were doomed when they first came to us. Okay. We showed them how money worked. We had them be the bank. They made 9% in private lending, and now they're making $76.95 and they never touched their principal. How many of you like that retirement strategy? Because they do. I love it. Again, more numbers. People love the numbers, but I'm running out of time. And here's the deal. I'm going to send you all a video that is going to show you how to get all the money back for all the cars you ever buy, drive, and own. But more importantly, I want to teach you this firsthand. But I ran out of time because I got so passionate about what we were just doing there that what I'm going to have to do is defer that to this weekend. I'm going to teach you all how to get all the money back for all the cars, planes, trains, whatever you want. But I'm going to show you cars. I'm going to show you to get all the money back for every single car you will ever buy, drive, and own. And all you need to do is change one thing. You don't need to take on any more risk. Okay. These are the things you don't need to do. You don't need to work any harder or any longer. You're certainly not going to take on any more risk. You're not going to give up control of your money, and you're not going to save any more money. But I'm going to show you how to get all the money back for all the cars you ever buy, drive, and own. So we will send that to you, but I'm going to teach that this weekend. But I'm not going to just teach that. I'm going to teach you some high level stuff, how to use this system to do private lending, how to use this system for lots of really fun things that I didn't get into tonight. That's what I'm going to teach you this weekend. But that's not all you're going to learn. Stephen, what else are they going to learn this weekend? Oh.
A whole lot. You know, I know we were going to get into self-directed IRAs. We're running out of time. And how can I follow that up anyways? I mean, to tell you the truth, the money multiplier policies just blow it out of the water. Is there a time for retirement accounts? Absolutely. Is there a strategy for them? Absolutely. Especially when we start talking about Roth IRAs and solo Ks and self-directing them. But the good news is every single one of you that's already registered at the discount 197, I just counted, we have 15. So we have 5 spots left of the 20 for tonight. So the next 5 people I get the discount, and you're going to get a month to MSTV coaching. So our MSTV coaching is a 2-hour group coaching call we do once a month. And what we do is Chris gets one of his billionaire mentors, or somebody that I've known over the last 10, 12, 14 years, that's a multi-millionaire in business or real estate. And we bring them in to mentor you. So we bring our mentors in our network to you. So you'd have to pay tens of thousands of dollars to have access to these people. We bring them to you for 2 hours a month. Okay. So it's a Zoom, but instead of just Chris and I on here, it's all of you. So MSTV is $19 a month or $190 a year. It's very inexpensive. It also comes with a bunch of on-demand videos. So we recorded an in-depth self-directed IRA training course for you, and that's in MSTV. So all of you that wanted to learn about self-directed investing, if you enroll for the 3-day, we will, you're going to get a 30-day free trial to MSTV. So you can log in there and watch the SD IRA training and hop on this coming month's coaching call, which, do we know who it is yet, Chris?
For the coaching call, yes, it's my buddy Kelly. So Kelly Cardona, I think that's how you say it. I always screw his last name up. But Kelly is a rock star, not in an industry that you would think, but he has a lesson to teach you all, and he's going to be on there. You can look him up, Kelly Cardona. Okay, and we'll send that link out with this. He's going to be on the next 2-hour group coaching. And the cool thing about Kelly, let me just paint a picture. Stephen, you know him. He's got blonde dreads. He's got a big goatee. He's worth a lot of money, and he got there in the hairdressing industry. So you're probably like, why do I want to hear from a guy like that? Because don't you want to learn how he took something which not many people become extremely wealthy and turned it into something that was massive, something that got the attention of Paul Mitchell, that he created a brand inside of Paul Mitchell and eventually sold it. You want to learn how somebody can do that because they think different? You need to hear from Kelly. He's not only a rock star, he is one of the most down-to-earth, unbelievably salt-of-the-earth kind of people. You met him this weekend at Secret.
Yeah, awesome guy.
Everybody else is going to meet him, but I just had to paint that picture. Somebody was just asking, yes, Justin, this is all recorded and you'll get recordings of it. Somebody was just saying that they couldn't see where to put the code in there. When you go to the registration page and you go to the checkout page, it should be right there. There should be.
I'll show you. Let me share the screen and just show you guys
please,
exactly what I'm talking about.
So let's just show that. And then I got some free stuff I want to give away. And then we're going to wrap for tonight.
Okay. Let me show you. So this is the page from moneyschooltraining.com/registration. This is where you go to register for the event. But just to highlight one more time, everything that you're going to receive. So day one is all about controlling your capital. We're going to show you how to get all the money back from every car you'll ever buy, drive, or own. We'll teach you how to start using the policies for investing, things like private lending, putting your money in private funds, things like notes investing. And then over the next 2 days, Saturday and Sunday, we're going to introduce you to all these different types of opportunities and all these different types of investments out there. So you can start learning alternative investing and how to start getting out of this crazy bubble of a stock market that we're in, but not let your money sit in a bank. Again, you don't want your money sitting in a bank. What does it grow sitting at the bank? Zero. Where is inflation? Remember, we need to beat inflation at all times. So we put the money in this risk-free place within the whole life policy. We take that money out and we invest it and we grow it and we keep it moving. You got to have your little green men always out there working for you. So keep that money moving at all times. So we're going to introduce you to this entire world of investing this weekend. On top of that, we're going to teach you how to protect your money. Do we live in a sue happy society? Absolutely. So protect your money. Asset protection, very, very important. How to set up things to make sure that when you do pass down generational wealth, you're not getting hit with estate taxes and things like that. So we'll start talking about estate planning. And then we're going to show you, obviously, how to save money on taxes, which is usually one of the hottest sessions of the weekend, Chris, is saving money on taxes. Is anybody excited to learn how to save money on taxes? Man, it's a beautiful thing when you learn how to do that. I mean, if you're getting tax refunds right now, if you get a tax refund every single year, you're the first people that should be signing up for this 3-day, because odds are you're going to save a lot more money in taxes just learning what you're going to learn over this weekend than what the $197 or $297 price tag is for the event. Actually, I'll guarantee that. If you don't save that, at least on that, we'll give you your money back for it, guys. Like, that's how powerful this is. If you're getting a refund now, you should be the first people on there. So you can look, we're going to talk about options trading. We're going to introduce you to some new technology. We haven't even gone through all the bonuses that you guys get, but we'll at some point have to fit in some training on how to use all that stuff. So this, hop on here, see what other people are saying. I mean, we have so many success stories. Go on our Facebook groups and things like that. You can see what people are saying. It's really a wonderful thing. So getting down here to the presenters, so you can kind of check out who you're going to be learning from. And then we run into the bonuses. So yes, the event is recorded. You'll get the recordings each day and you'll have access to those forever and ever and ever and ever. You're going to get the file vault, which includes the cash flow deal inspector, the max offer form, closing cost estimator, private lending packet, credibility bill. These are all the documents and tools that Chris and his team created and used to flip over 260 houses. Okay. So you guys are getting those exact tools that they would use out there in the field that they created to quickly analyze deals, figure out if it's a good deal, and be prepared to make that offer. You're going to get everything. They're fully customizable. They're templates. They're ready to go for you. You're going to get the comprehensive wealth builder kit. It's an on-demand video training and education library with unbelievable training on demand in there. Also, like I was saying with the other videos, the Money School TV. So MSTV is the 2-hour group coaching, as well as all of the on-demand videos that we've done in the past. They're all about 15 minutes long. So they're all real direct to the point. You're having a bad day, we got positive mindset in there. What about Stefan? I know Stefan what's his last name? I always mess it up.
Yeah, Stefan Arnio.
Stefan Arnio, if you guys don't know who he is, like he unfortunately, we lost him last year. And he was fighting, some disease and stuff over time, COVID cancer and stuff like that. So, but unbelievable human being. Like, so, he's in there with one of the last interviews that he did with Chris in MS. So just unbelievable content inside of MSTV as well. We're going to do a consultation with each and every single one of you to set you up, because like I said yesterday, we're going to give you on Monday an action plan. This is the first thing you need to do. This is the second thing you need to do. This is the third thing you need to do. And this is what you need to do moving forward. So you have a plan of action exactly to know what to do to change your financial life forever, doing one thing different. So it's a step-by-step plan to do that. And then we're going to hop on the phone and talk about it. Every single one of you that wants to do that, we'll be hopping on the phone and talking. And then you're going to get a free self-directed IRA starter kit. So they give you education, as well as waiving the $350 setup activation fee through our partners at Horizon Trust Company.
We're giving too much shit away. It takes too long for you to explain all the free shit. And not only that, this opportunity that I'm going to give everybody with Intellivision only at the 3-day event in a unrecorded private session after day one or day two. But yeah,
before you do that real fast,
show them how to do the checkout with the coupon right there. Have a coupon.
Yeah, that's what I was going to show you. So you just
there you go, Mike.
Right here, have a coupon, click right there, and it'll let you enter in the code.
All right. Perfect. So now you guys know you got to go all the way to the checkout to see where the coupon goes in. If you're trying to figure out the coupon from the front page, get into the checkout page, and that you just put in 2021. I don't know how many seats there are or how many spots there are. 5, 4, but here we go. We're going to get rid of those 5 right now. Here's another thing that I'm doing. Okay, there you go. Here's another thing that I'm doing, and I just decided to do this yesterday. So if you weren't here yesterday, great. This is brand new. How many of you have ever heard of this company in television? If you're older, like me and Steven, you remember that they were one of the leading video game companies out there. Then it was owned by Mattel. Mattel then spun it back to the employees, and a gentleman by the name of Tommy bought Intellivision back. Now, Tommy, the owner of Intellivision, let me give you his stats. He's been in this business, the video game business, for 30 years. How many of you have ever played Guitar Hero? That's right. He created that with his team. How many of you have ever played Tony Hawk Pro Skater? That's right. He created that with his team, and so many more, but I'm not going to waste your time. Intellivision has something that they're offering or they're putting out in the market. They've already sold $250 million of pre-orders to Amazon, Walmart, and some other big box stores of this brand new, revolutionary, game-changing video game terminal. What they're doing is disrupting the entire video game industry. It's not another Sony or another Wii. It's everything you always wanted a video game to be back then, and everything a video game is today brought into this brand new technology that has been thought out for years, and it is taking off like lightning. You will never, ever, probably in your life again, have the opportunity to invest in a video game company like Intellivision. They just don't need your money. They have plenty of their own money and they don't need any of yours, so they never bring in outside investors. But because of COVID, video game companies like Intellivision launching a brand new product have a little bit of a supply problem. They can't get the parts they need to manufacture these things. So they've been burning money manufacturing, taking orders, getting this production scale ready, and they can't sell these units. They can't capitalize yet because all the parts are out in those ships out off of Huntington Beach and everywhere else in California and everywhere in the world. They can't get the parts yet. Tommy came to us at Secret Knock and made an offer for a $10 million raise into Intellivision. And they made it so damn lucrative that I jumped all over it. I literally was like, I was almost there with like a samurai sword, like, get away from Tommy. I'm taking this thing myself. Get away. I don't have $10 million, but I know a lot of people like all of you that pooled together with 10,000 here, 50,000, 100,000. We can put together $10 million and we can raise this money for Intellivision and make a stupid amount of money. This is an opportunity that literally, I don't think I'll ever be able to bring one that will probably yield more than this, because this will be a one and done and never again will probably be needed. This is something I'm going to bring. So now, with that being said, and I have 3 questions I have to get to: Pamela's, George's, or Jorge's, I don't know how you say that, I think it's George, and Juan's questions. But here's the deal. I've got 2 more books. So what I'm going to do is I've got a book, my new booklet here. It's Drifting Away from Traditional Car Buying. This is the booklet that teaches you how to get all the money back for all the cars you ever buy, drive, and own. Right now, for the very next person that goes to that link and takes one of the last 5 seats, you get this book. And all I need to know, and I'll take your word for it because I'm a trusting guy, who's it going to be that's going to sign up right now for this weekend? If you say, I will give you this book. Then I'm going to go round 2. So right there, Michael. Okay, Michael Coca. Did I say it right, Michael? I'm probably getting it wrong. COCCA. And then what I'm going to do is I'm going to sweeten this. Justin Jones, you just did it. Justin, I'm going to give you this one. Smash Your Alarm Clock, Living the Dream Through Real Estate Investing. This one's going to the next in line, which is Justin Jones. And what the hell? Why not? Justin. Make sure we get these addresses. So Stephen gave you his email to send the addresses. I'm going to give a couple more of those booklets away. So right now, let's see who else just took one of those final seats. Holy crap, we got a bunch. There's that. So Ryan and Blanca, send us your address. Send it to Stephen right there to his email, and I'll give you that booklet. Now, when you send the email, folks, please tell me what book you earn or what book you got. I got your name, so that'll be fine. I'm going to be busy tomorrow sending books out. Okay. But that's what we do. We honor our commitments, and I'm honoring all of you for giving us tonight and yesterday your commitment of the most valuable thing you have, which is your time. So I want to personally say thank you, not just from myself, but from our entire Rockstar team, Steven and Shauna and Gabby. And I'm not going to go through the whole team because there's a lot of them. We all respect and love you because you are the 5%. You are the ones that are willing to invest your time, your money, and your energy to learn something new, which makes you so different than everybody else. And there's no other thing we can say than thank you. So from us to you, thank you for joining us. And we cannot wait to see you this weekend at one of what I think will be the last one of the year, but one of the best because of the lineup. We've got Harry Dent. We've got probably Kelly coming on that one as well, because I think we got to swap some speakers. We got Sullivan teaching you the 1041 tax structure. I mean, did I already mention Harry Dent Jr., world leading renowned economist? And you're going to get the Intellivision offer and so much more this weekend. And it costs you $197 and we give you over $3,000 in free stuff. Come on now. Like, that is what I call being smart, but it takes your time. You have to actually be there. And if you can't be there, you're going to get the recordings and then you have to watch the recordings. So it's a commitment of time more so than money, but smart and wealthy people do two things well. They invest their time, which you all did tonight, and you're all doing this weekend, but they also invest their money, because when you put your money where your mouth is, things become real and you take them more seriously. And I commend you for that as well. So Steven, anything in closing you want to go over before I hit these 3 questions?
No, I love it. I was just responding to him actually.
Oh, were you? So Pamela had a great question. Steven's responding, but I'm just going to knock it out of the park. I withdrew $200,000 from my IBC, which is the infinite banking concept, that machine we've been talking about, in June. I now have the ability to pay this back in the next 9 months. Is this the best use of money, or should I invest it elsewhere? I will have an additional $100,000 to invest above and beyond the 200 back into my IBC. Great question, Pam. So what I would do, Pamela, is I would take that money and I would put it back into the policy. And then what I would do is come to us through Private Money Club or something, and I would find somewhere else to reinvest that money. So I'd remember, you got to follow the circle. Take the money. Now you've got a way to put it back. You get it back in the policy. Then we're going to redeploy it, because now we want a new set of books and records, a new note that goes with the new loan that we're going to do. And I'm just saying whatever. And we're going to remove that money out there. Now, maybe it's in television. Maybe it's a Chris Rude deal. Maybe it's another lending deal you do. Maybe it's crypto. It doesn't matter. But let's get the money back in there and then redeploy the money again. Some people would say we're playing financial gymnastics with the insurance company. I'm just trying to keep your books and records clean, because if you took money out, let's get that money back in, and then let's take it out again for the next thing and keep that money moving. And if you've got an additional 100,000, well, I think it's just worthy of getting a phone call to discuss some of the opportunities that are out there. We don't manage your money ever, but we're always investing our money. So we always have new opportunities coming up, just like in television. So Pam, hopefully that helped. All right, George. So if real estate is risky due to high prices and possible depreciation, but refinance your house or get some equity from your house, what will the best investment option be? Well, first and foremost, if you've got equity in your house, get it out. Okay, get it out. Get a home equity line of credit. You don't have to pay for that money unless you have an opportunity to put that money in. But if that equity in your house, if you don't do anything, if you don't get a home equity line or get access and control of that money, the bank can take that away from you. Your house can depreciate. And when it does, guess what? Opportunity over. You no longer have access to that money. So definitely that. And I'm saying real estate is risky in context. It's risky. Just understand that it's only risky because you're buying at a high price. If you're cash flowing the real estate, the cash flow is more important than the depreciation. Just understand that if you're looking for an exit in the next 5 years, maybe even 10, your exit may not get you back what you paid for the property. But if cash flow is your game on, man. If cash flow is your game and you need more cash flow, real estate is going to be one of the better places to get it. And if you don't like any of those answers, then take the equity out of your house and do what Rockefeller always says is smart: own nothing and control everything. Do what we do. Be the bank. Lend on real estate deals. Be in a first secured position. Make sure those deals are short term, and then they just pay you all the money back and all the interest, and you never had to own the real estate, take on the risk. They took the risk on. You were just the bank. So hopefully that helps. Juan said, so how can I know more about designing the whole life insurance? Juan, you just got to watch the 90-minute video that we'll send you, or come to the 3-day training, because I'm going to go real deep into that day one, and then set up a call with us and we'll help you get set up. Steven can send you the link if you want, if you've already seen the 90-minute video, but that is a prerequisite. You either need to see us present the money multiplier, the full thing. I only did a little bit tonight, or you need to watch the 90-minute video before you book a call. Eve said, what would be the minimum amount to lend on the gaming system? I will have an answer for you on that tomorrow, but it probably will not be all that much. Okay. I just don't have that answer yet because I have a call with Tommy and the CFO tomorrow. Juan said again, should I use the policy loan to contribute to my Roth IRA? Absolutely not. Draw a line. Steven's like, no, don't do that. Draw a line in the sand. Your qualified money stays on the left. Your non-qualified money stays on the right. Your qualified money is your Roth IRAs, your 401ks. That money stays over there. Now, this money that I'm talking about is non-qualified. Your savings account, new savings, and that, keep that over there. We got to draw that line in the sand. Great question, Juan. And Janet just said, okay. All right, Janet, okay. We'll see you this weekend. So some people were having trouble signing up for the 3-day. Yeah, me and Steven just kind of blasted you with that. The link does work. It wasn't in the beginning, but now it is. So make sure you do that. How do I see the 90-minute video? Easy. I'll give you my website. So just go to my website right there, chrisnaugle.com. And like once you're on it for like 20 seconds, a pop-up will come up saying 90-minute video. Just watch that video. And then Steven, do you want to put your calendar link on there?
Yeah, I also just put I put a direct link to the videos too.
Oh, there you go. Shit, dude, you're way on top of it. Look at how slow I am, folks.
And if anybody needs anything or wants to hop on the phone this week to talk about, is this 3-day training right for you? Make sure you're going to get the value. It's going to fit what you're trying to accomplish. Just email me. My schedule is like slammed. So I'm not going to put my link up, but if you email me, I promise I'll make time for you. Okay.
Awesome. 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 All right. Anyone else have any final questions before we finish the night up here? Did you guys enjoy this? Was this good? And I feel bad that I didn't get through the whole presentation, but man, I just got into it. You guys enjoyed this? I know some of you are gone already because you guys got what you want. All right. Well, that's all we care about is that you got something that you can actually apply, that you can use. Hey, maybe even I just got you fired up to start looking at things a little differently. Steven and I, sometimes all we want to do is just to kind of slap you around a little bit and say, look, it's been in front of you the whole time, but you've always been looking over here. The answer's right here. Just take and change one thing. So we appreciate all of you. Thank you from the bottom of our hearts. Steven is my right-hand man in this stuff, and we will not stop until all of you are off of the financial hamster wheel and out of financial slavery and being, in control of your money out there, being the bank. So thank you. And we will see the majority of you this weekend at the 3-day event.